Hi, I'm Mike Swanson from TradeWestForex.com, and I've just sent out an email about some of the common trading mistakes that most traders make, and I want to go ahead and go over the charts and explain some of this in detail. So one of the biggest things I see out there is traders blaming bad trades on something else. And what usually happens is they don't know why to trust their strategy, and they don't, mainly because they don't have an understanding of why it should or should not work. So I want to just look at a very basic strategy and look at the principles behind it, so that if we were trading something like this, we would know why to expect or not expect a trade to make or lose money. So let's take a look at this. This is basically a 200 EMA, and the orange line is a 34 EMA. And I'm just putting this on a 15-minute chart. This is just for demonstration, educational purposes. And let's just take a look at this strategy, something you could do if we put together some trading rules. So basically, we can say once the price moves above the 200 EMA and pulls back to the 34 EMA, we look at that as a trade in the direction of the trend, and you buy on the pullback, on the swing back to the 34. So that's your trading rules. Now, some of you might go out and try to trade this strategy, and when it starts to lose and fail you and doesn't work out, you move on and try something else, or you blame you blame it on certain conditions in the market and whatever it is. But what you need to understand is any strategy you're going to follow, you need to know why it should work. Why are you even executing a trade if you don't understand the principles behind the strategy? In this particular system, what we could analyze is that when the market moves above this 200 EMA, this is our overall trend direction. So we know that we'll have a higher probability of success with a trend following system if we're above this level and we buy on a pullback. The reason we'd want to buy on a pullback is that way we don't get stuck buying at the top of one of these swings. And if we look at the 34 EMA, it's a commonly traded moving average where the market settles around and ranges around quite often. So, I mean, those are just some really basic things I'm throwing out there just to show you what you need to, what you need to do is any strategy you plan on trading, you need to be able to analyze it and understand why you're using certain things, why certain indicators should work, or what to know, knowing what to do when it stops working. So with a system like this, let's say I come up here and I buy at this point. That was the easy part, right? I bought in on the pullback. I followed the system. I understand that this market's in a trend, and I bought the pullback. And then what happened? It consolidated in this case. So does that mean my system failed me? Because this trade, but depending on how I managed it, if I didn't get out here on that initial swing, I went into a drawdown, went into consolidation, and eventually maybe got out. I got out down here and took a loss just before it took off. See, what we're looking at here is just one single trade, and that's another mistake I've seen from traders is they seem to analyze a short period and base the entire success of a system off that period of trading. And so that's another thing. You really need to look at things longer term over quite a few trades and different market conditions. So let's look at another really common mistake is basically holding on to trades that are down a few pips because you can't stand to lose a pip. And I see this all the time, and it can be really frustrating. I'm sure this has happened to you before, and maybe even on a daily basis if you're a day trader. Is you get into the market. Let's look at it this way. Okay, let's say we did buy this trade right here. And let's say the market moved up, and right here we're just barely in profit, and then it comes down against us. And right here, I'm going to move this up a little bit. We're going to show that we got in right in this area. Okay, now what happens is you've been in this trade for a while. Let's say you've been in this trade all the way to this point. You've been in it for hours, and you want to leave. You want to quit trading for the day, but you're stuck in this trade. That's the way you're analyzing this, is you're thinking, hey, back here twice, 3 times it's came up and put me into profit. So why shouldn't it do it this time, right? So you hold on to the trade. You're right here. You're down just 2 or 3 pips, and you decide you don't want to take a couple pip loss. So the market goes against you, and maybe you've tightened up your stop at this point, or at that point you decide to get out and lose money. So the point I'm trying to make here is that if you look, this is hindsight now, of course. If you look here, it did eventually come back up, but let's say you didn't know that and it went against you and you ended up having to take a loss because you didn't want to get out back here when it was up a few pips, and then here you didn't want to get out again because it was down a few pips. You just did not want to see a loss on your account, whatever it is. But it's very common to see that. Happens all the time where traders just, they're down 2 or 3 pips and they're like, I just got to make a pip. I don't want to see a loss on my account. And if we were to go look at some different examples, what we could do is we could show, let's say you sold right here at the bottom. This will probably be a better example to make sense of this. But let's say you sold at the bottom here. Market went to profit a little bit, went up against you, came down, and now you wanted to quit trading here, and you're sitting here watching this candle moving up and down. You're down a few pips and it never comes into profit, and you continue to hold. The market whips against you, potentially hits your stop, or maybe you trade without a stop and it pushes even further to the point where it really just keeps moving against you, and maybe you get a margin call. Okay, so that's the number 2 mistake I see very often, is just not wanting to take a small loss and just move on. Okay, number 3 here, I've got another one, is revenge trading. This happens quite often as well, where after a loss you take reckless trades, try to make the money back, and put yourself in an even worse position. So let's just look at an example of what that could look like. Okay, so what I usually see is traders making a good amount of money. Maybe they've won 95% of their trades or won them all. They've had 10 out of 10 winning trades, and they feel like they've got the handle on everything. So they've been buying over here, making profit. They bought right here, made money. Okay, so we can say that you've been killing it. You've been making profitable trade after profitable trade, winner, 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 and then you come up here and you buy the top unknowingly, thinking that this is a breakout. You buy it, market starts to move up, but quickly goes the other direction, and maybe that you fall into the trap. This is something else you'll see is you're sitting here taking small profits, and then this trade that you feel like is going to hit the target as well doesn't, and you don't want to see all those profits go away. So you, instead of taking a loss, you let it keep going against you, and you end up finally cutting your loss down here when it breaks below maybe the 200, right? So you've given back all these profits now. Now you go into what we would call revenge trading, and you're thinking, I can't, I was kicking butt back here. I don't see why this one trade went bad, so if I get back in there I can get it back. So now your mindset has changed. All you can think about is getting back those profits you had at one point. So you get in here and just start making random trades, and maybe the first one works out, and that kind of helps confirm that you're right and that you can get back that loss. And then you come over here and take another trade, and again maybe you make a little bit of profit. You had to suffer a little drawdown. You're trading without a stop maybe, and then finally you hit another bad trade. Maybe you bought right here thinking support would hold. It breaks out, and again you give back all those profits, plus you're down a whole bunch of money. So hopefully you can, I'm sure many of you are relating to these mistakes, and I just wanted to kind of get on the charts and explain them, and hopefully you can overcome those. And I think the first thing is recognizing the mistake number 1, where you blame trades on something else because you don't understand why your strategy should work, why you're even trading it, and you've got to build that foundation first. You need to put together a system, whether it's simple, complex, it doesn't really matter. The idea is it needs to be something that makes sense, that you know why it should work, and not just some random system with 30 different indicators. I mean, if that's what works for you, that's fine, but you've got to have an understanding of why you're trading the way you're trading. So hopefully that makes sense. This is just a short video that I hope helps you guys become more profitable and more consistent. The next video I'll be doing will be going over a couple of traders' track records and some of the mistakes they're making and how we can improve their trading. So make sure you leave comments about the videos. Also put in your email in the subscribe box on this page. That'll help ensure that you're getting our emails and getting the links to these upcoming videos. So go ahead and do that, and I'll see you in the next video.